You were never meant to learn about this the way you are learning about it right now. Not from a government notice, not from your local social security office, and certainly not from the evening news. Because the people in charge of managing your retirement money, the money you spent your entire working life contributing to, decided that hiding this information in fine print and federal jargon was sufficient. Well, it is not sufficient. Not for you. Not for the millions of Americans who built this country with their hands, their time, and their sacrifice. And definitely not right now. Because what changed inside the Social Security system beginning May 1st is something every retiree in America needs to understand before the next check arrives. Let me be clear with you. I am not here to frighten you. I am not here to distort the truth or make you panic over something that does not matter. What I am here to do is explain exactly what happened, why it matters to your monthly income, and what you need to do about it starting today. Because the difference between the people who protect their retirement and the people who slowly watch it disappear almost always comes down to one thing: information, not luck, not connections, not having a financial advisor on speed dial, just knowing what is actually going on and acting before it is too late. So, here is what we are going to cover. We are going to talk about the cost of living adjustment that officially hit your May payment and why the number they gave you might actually be working against you when you factor in everything else. We are going to talk about a historic change to two provisions that have been quietly taking money from public sector retirees for decades, and why May is the month when that finally starts to turn around. We are going to talk about Medicare premiums that are silently cutting into your Social Security check right now, and a little-known appeal process that could save you hundreds of dollars a month that most people have no idea even exists. And we are going to talk about the earnings limit, the tax trap, and the exact steps you need to take this week to make sure the government is not keeping money that belongs to you. But first, let us talk about what actually happened with the cost of living adjustment, because I think there is a major disconnect between what people were told and what people are actually experiencing. The Social Security Administration announced a 2.5% cost of living adjustment for 2025. On paper, that sounds like you are getting a raise, and technically you are. For the average retiree, that works out to roughly an extra $50 per month. Over a year, that is $600. If you and your spouse both collect Social Security, you could be looking at $200 or more combined. And yes, that money is now officially reflected in your May payment. So if you have not checked your deposit amount recently, you need to do that today, not tomorrow. Today, because here is where the disconnect starts, that 2.5% was calculated based on something called the Consumer Price Index. It is the government's way of measuring how much everyday goods and services cost. And in theory, the cost of living adjustment is supposed to keep your Social Security benefit aligned with inflation. It is supposed to make sure that as prices go up, your income goes up with them. But let me ask you something. Does your grocery bill feel like it only went up 2.5%? Does your electric bill feel like it only went up 2.5%? When you fill up your tank or pay for a prescription or look at what your insurance costs this year compared to last year, does any of it feel like 2.5% covers the difference? For most people, the answer is no. And that is not just a feeling, it is math. Because the Consumer Price Index measures a broad basket of goods and services across the whole economy, but retirees do not spend money the same way a 35-year-old does. Retirees spend more on healthcare. They spend more on housing. They spend more on the exact categories that have seen the steepest price increases over the past 3 years. So while 2.5% might reflect the general economy, it does not reflect your economy. It does not reflect the reality of trying to live on a fixed income in a country where everything keeps getting more expensive. Now, I want to be clear. I am not telling you this to make you feel hopeless. I am telling you this because understanding the gap between what the government says inflation is and what you are actually experiencing is the first step toward making smarter decisions with the money you do have. That $50 a month matters. That $600 a year matters, but only if you are not losing it somewhere else without realizing it. And that brings me to the part of this that most people do not even know about. The part that could mean the difference between getting by and actually moving ahead. Because while everyone was focused on the COLA number, something much bigger was happening behind the scenes. Something that affects a very specific group of Americans who have been getting shortchanged by the Social Security system for years. And if you worked in the public sector at any point in your career, or if your spouse did, what I am about to explain next could put thousands of dollars back into your hands. Real money. Money you already earned. Money that was taken from you under rules that were never fair to begin with. Stay with me. We are just getting started. For decades, there were two provisions hidden inside the Social Security system that most Americans never heard about until it was too late: the windfall elimination provision and the government pension offset. If those names mean nothing to you, consider yourself lucky. Because for the people affected by them, these two rules were responsible for reducing hundreds of dollars from their monthly Social Security checks, sometimes more, year after year after year. Let me explain how this worked, because it is important that you understand just how unfair this system was. Let us say you spent 25 years working as a teacher in a public school district. During that time, your employer did not pay into Social Security. Instead, you were part of a state pension plan. But before you became a teacher, or maybe on the side during summers and weekends, you also worked jobs that did pay into Social Security. You put in your time, you paid your taxes, you earned your credits, and when you finally retired, you expected to collect your pension and your Social Security benefit because you earned both of them separately through separate work. But the government did not see it that way. Under the windfall elimination provision, the Social Security Administration reduced your Social Security benefit because they said you were double dipping. They used a modified formula to calculate your benefit that could reduce it by hundreds of dollars per month. Not because you did anything wrong, not because you cheated the system, but because you happened to work a public sector job that had its own pension plan. Teachers got hit by this. Firefighters got hit by this. Police officers, postal workers, state and municipal employees across the country. People who served their communities for decades were penalized for it when they retired. And it got worse. The government pension offset was even harsher. If your spouse worked in the private sector and paid into Social Security, and you were entitled to a spousal benefit based on their record, the government pension offset could reduce or completely erase that spousal benefit. We are talking about surviving spouses, people who lost their husbands or wives, being told they could not receive the survivor benefit their spouse earned because they themselves had a government pension. Think about that for a moment. A widow who spent 30 years teaching children in a classroom, whose husband worked in construction and paid into Social Security his entire life, could be told she gets nothing from his record. Not reduced, nothing. Because of a rule that treated public service like a disqualification. This was the reality for roughly 3.22 million Americans. And for most of them, there was nothing they could do about it. They wrote letters, they called their representatives, they joined advocacy groups and pushed for change. And for years, nothing happened until now. The Social Security Fairness Act was signed into law, and it eliminates both the windfall elimination provision and the government pension offset entirely. Not reduced, not adjusted, eliminated, gone. And what that means in real terms is that millions of Americans who have been receiving artificially reduced Social Security benefits are now entitled to their full benefit amount, the amount they should have been receiving all along. But here is the part that makes May so important. The Social Security Administration has been working through the process of recalculating benefits and processing retroactive payments for everyone affected. And May is when a significant wave of those adjustments is expected to arrive. Some people are going to see their monthly check increase by $200, some by $400, some by even more depending on how severely their benefit was reduced and how long they were affected. And then there are the retroactive payments. If you were underpaid for months or even years because of the windfall elimination provision or the government pension offset, the Social Security Administration owes you that money. Back payments, lump sums, real dollars that were withheld from you under rules that no longer exist. Some people are looking at retroactive payments of $5,000. Some are looking at significantly more than that. It depends on your individual situation, your work history, your benefit calculation, and how long these provisions were applied to your account. Now, here is what concerns me. I know for a fact that there are people watching this right now who are affected by this change and do not even know it. They never understood why their Social Security check was lower than they expected. They simply assumed that was how the math worked out. They accepted the number on their statement and never questioned it because the system made them feel like questioning it was not an option. I need you to hear me on this. Questioning it is absolutely an option. It has always been an option. And right now, with these provisions eliminated, it is more important than ever that you look at your benefit with fresh eyes and make sure you are receiving every dollar you are entitled to. If you worked in any public sector role at any point in your career where your employer did not pay Social Security taxes, you need to take action. If your spouse worked in such a role, you need to take action. If you are a surviving spouse and your benefit was reduced or eliminated because of the government pension offset, you need to take action. The Social Security Administration is processing these changes, but they are dealing with millions of cases, and the people who contact them, the people who call and verify and follow up, are the ones who get their money first. I am going to give you the exact steps to take later in this video. The phone numbers, the websites, the forms, everything you need. But right now, I want to make sure you understand just how significant this moment is. Because for 3.2 million Americans, May 2025 is not just another month. It is the month the government finally starts giving back what it should never have taken in the first place. And we are not finished yet, because even if the windfall elimination provision and government pension offset do not apply to you, there is another change hitting your May check that you absolutely need to understand. And this one affects almost everyone on Social Security. Let us talk about the thing that is quietly eating your Social Security check every single month and getting worse every single year: Medicare, specifically Medicare Part B. Because this is where I see people losing money they do not even realize they are losing. And it drives me crazy because most of it is avoidable if you just know what to look for. Here is how it works. For most retirees, your Medicare Part B premium is deducted directly from your Social Security payment. You never see that money. It is gone before your check ever hits your bank account. And in 2025, the standard Medicare Part B premium increased to $185 per month. That is up from $174.70 in 2024. So right there, you are paying an extra $10-30 every single month just for the standard premium. Over a year, that is an additional $123.60 coming out of your Social Security income. Now remember that 2.5% cost of living adjustment we talked about earlier, the one that was supposed to help your benefit keep up with inflation. For the average retiree, that COLA added roughly $50 per month, but Medicare just took back about $10 of those dollars before you even saw them. So your real increase in the money that actually lands in your pocket is closer to $40. And that is only if you are paying the standard premium, because here is where it gets significantly worse for a lot of people. And this is the part that most retirees do not fully understand until it is already costing them serious money. There is something called IRMA, the Income-Related Monthly Adjustment Amount. It is basically a surcharge on top of your standard Medicare premium that kicks in if your income exceeds certain thresholds. And the word income here is doing a lot of work because the government does not just look at what you are earning right now. They look at your modified adjusted gross income from 2 years ago. So for 2025, they are basing your IRMA determination on your 2023 tax return. And if your income in 2023 was above $106,000 as an individual or $212,000 as a married couple filing jointly, you are paying more than the standard premium, sometimes a lot more at the highest income brackets. Your Medicare Part B premium can exceed $600 per month. That is more than $7,200 per year coming directly out of your Social Security benefit for Medicare alone. And a lot of people get caught in this trap, not because they are wealthy, but because they had a one-time financial event in 2023. Maybe they sold a property. Maybe they took a large distribution from a retirement account. Maybe they had capital gains from selling investments, one good year on paper, and suddenly Medicare treats you like you are swimming in money for the next 2 years. But here is what almost nobody tells you. You can appeal your IRMA determination. If your income has dropped significantly since 2023, if you have retired, if you have stopped working, if you have experienced a divorce, the death of a spouse, or any other qualifying life-changing event, you can file what is called a life-changing event appeal and potentially get your premium reduced back to the standard amount or close to it. The form you need is SSA 44. You can download it from ssa.gov or pick it up at your local Social Security office. You fill it out, you provide documentation of the change in your income, and you submit it for review. I have talked to people who were paying $400 a month for Medicare Part B, filed this appeal, and got it reduced back to $185. That is a savings of $250 per month. That is $2,580 per year back in their pocket. Real money, life-changing money for someone on a fixed income. And they almost did not file because they assumed the number on their statement was final. They thought if the government said they owed that much, then that was just the way it was. It is not. The government makes mistakes. The government uses outdated information. And you have every right to challenge a determination that does not reflect your current financial reality. So if you are paying more than $185 per month for Medicare Part B, I want you to stop right now and think about whether your income has changed since 2023. If it has, you may be overpaying and you do not have to accept that. Now, let me shift to something that affects a completely different group of retirees, but is just as important. If you are collecting Social Security benefits and you are still working either part-time or full-time, there is an earnings limit you need to know about. And the numbers changed for 2025. If you are under your full retirement age for the entire year, you can earn up to $23,400 without any reduction in your Social Security benefits. Once you go above that amount, Social Security withholds $1 for every $2 you earn over the limit. So if you earn $30,000, that is $6,600 over the limit, and Social Security would withhold $3,300 from your benefits over the course of the year. Now, if you are reaching your full retirement age in 2025, the limit is much higher. You can earn up to $62,160 in the months before you reach full retirement age, and the withholding rate is less aggressive. They take $1 for every $3 over the limit instead of 1 for 2. And once you actually reach full retirement age, the earnings limit disappears completely. You can earn as much as you want with no reduction at all. But here's the thing that trips people up. When Social Security withholds money because of the earnings limit, that money is not gone forever. When you reach full retirement age, they recalculate your benefit and give you credit for those withheld months. Your monthly payment goes up to account for the money that was held back. But between now and then, your cash flow takes a hit. And if you are not prepared for that, it can feel like the government is punishing you for working. And that brings me to one more thing that catches people completely off guard every single year. Your Social Security benefits can be taxed. I know you already paid taxes on that money when you earned it. You watched it come out of every paycheck for 30 or 40 years. And now the government wants to tax you again when you finally collect what is yours. It feels wrong because it is wrong, but it is the law and you need to plan for it. Here is how it works. The government looks at something called your combined income. That is your adjusted gross income, plus any non-taxable interest plus half of your Social Security benefits. If that number exceeds $25,000 as an individual or $32,000 as a married couple filing jointly, up to 50% of your Social Security benefits can be subject to federal income tax. And if your combined income exceeds $34,000 individually or $44,000 as a couple, up to 85% of your benefits can be taxed. Those thresholds have not been adjusted for inflation in decades. They were set in the 1980s and 1990s, and they have never moved. Which means every single year, more and more retirees get pulled into paying taxes on their Social Security income simply because the cost of living went up and their benefits went up with it. The system is slowly taxing more of your retirement income without ever officially raising taxes. And most people do not realize it until they file their return and owe money they were not expecting to owe. So here's what I want you to do this week. Not next month, not eventually. This week. First, log into your My Social Security account at ssa.gov. If you do not have an account, create one today. It takes 15 minutes. Pull up your benefit statement and your earnings history. Look at every year of your working life and make sure it is accurately recorded. Your benefit is calculated based on your highest 35 earning years. If there is a year missing or a number that looks wrong, your benefit could be lower than it should be. Report it. Get it corrected. Second, if you were affected by the windfall elimination provision or the government pension offset, pick up the phone and call the Social Security Administration at 1-800-772-1213. Yes, the hold times are long. Yes, it is frustrating. But you could be owed thousands of dollars in retroactive payments and an increased monthly benefit going forward. That phone call could be the most valuable hour you spend all year. Third, if you are paying more than the standard Medicare Part B premium and your income has changed since 2023, download Form SSA 44 from ssa.gov and file a life-changing event appeal. Do not leave money on the table because you assume the government got it right. They do not always get it right. Fourth, if you are still working while collecting benefits, run the numbers on your earnings relative to the annual exempt amount. Know exactly where you stand so you are not blindsided by an unexpected reduction in your check. You spent your whole life earning this. Every early morning, every late night, every paycheck that had Social Security taxes taken out before you ever saw a dime of it. That was your money then, and it is your money now. The system is not going to fight for you. It never has. But you can fight for yourself.